Hello, everyone. Welcome to this week's Pirates Parley. This week, I have on my dear friend from the PythNet Foundation or Pyth Data Foundation, none other than Marc Tillemont. Give him a big round of applause.
Bonjour, bonjour, bonjour.
Bonjour, bonjour. If you have questions, drop them in the chat. Yeah, we're here for all types of questions, except the lewd ones. Let's start off with a small introduction. Tell me a little bit about how you came to be where you are today. What did you do for school? When did Pyth come to in your life? And what do you do now?
Definitely. First of all, apologies in advance for the tough, thick French accent. But at least it's good because usually people quickly get it that I'm French. I studied in the UK, Exeter University. I wasn't a very big kind of school or university type of guy. I really wanted to go out there, so I just did a master. What am I saying? I just did a bachelor, so 3 years of when you don't know what to do and you have no proclivity to code or have a big brain, you end up doing the classic kind of business, marketing, econ stuff that pretty much you get something out of school. Got it, and pretty much wanted to get out of like Europe, France, England, and managed to find a job in Hong Kong in the radiology industry. So when I was like 21, I started like pretty much selling contrast media to doctors. So to actual guys that did 10 years of studies, a bunch of physics studies, medical studies. I was kind of like sent to do some marketing, some sales for a French company in Hong Kong. It lasted 3 years. It was amazing, and like it was a family company, so it was kind of very easy to like try new things, etc. No stress. Like I recall, we were competing pretty much against General Electric and Philips, and like it's not like we had like hard KPI. We were kind of the classic French of like we're third, we're happy, we live a good life. But it was great because I managed to do many things that were way outside of my toolbox and knowledge base. But the funny part was, let's say, mid journey of this. I living in Hong Kong. I just moved apartment, and I ended up sharing a two-bedroom with one of the OG BitMEX guy, like the Australian guy, John, which I owe many things till now. But pretty much, he was like 18-year-old when he joined BitMEX back in the day, no diploma, and just was a hustler and did stuff and grew beyond imagination within BitMEX. And I was kind of lucky enough to have him like work as my crypto teacher every time after work. So it just at like from 9 p.m. till midnight, he would just show me my first like Bitcoin block or whatever, all these things. Um, and so pretty much for maybe a year, almost two, I was just reading as much as I could on crypto. It was still pre-COVID crash, etc. And I just found it amazing because I'm quite like anti-banks, anti-government type of guy. So
So
for me,
really the crypto punk
I love Monero.
anti-establishment. All right.
The first thing I was like this has a future was like Monero. I own zero Monero, but it was very much like privacy. Like the government, no one knows exactly how much money I have, what I do with it, and I found it amazing. So early on, I got the bug, the DeFi bug, like NFT, etc., gaming on chain. I don't want to say I don't care, but I don't care that much. Even from the early days, it was very much understanding all the Oracle, bro lending, because I didn't have like any finance background. So I was kind of very lucky to have this like 1 2 year period of pure learning, no expectation, just me having fun and being able to ask questions to guys that were running the biggest exchange back then or working in like in market making firms, etc. So over that time in Hong Kong, I was pretty much in a group of friends, 20 people, 19 were like full time working in crypto companies, and I was kind of the retard that was
The
just
odd
out
one
there.
out.
Exactly.
So was that?
Um,
So did you also meet like other, influential Solana people that were also like in the Bitcoin scene that day, like George Harrop, Arthur Hayes? Those guys were in Hong Kong around that time too, right?
I think Arthur Hayes, he had just left. I guess I've known the one and only, at least I've met him a couple times, SBF.
Oh, damn.
Different type of vibes. Uh, but no, yeah. So like a lot, for example, FTX, Backpack early days, Tristan, whom I owe a ton, like Tristan from Backpack, Mad Lads, etc. I owe a ton to. Um, Back in the day, Bonfida, when they shipped the .sol domain. So these were my, let's say, great friend from Hong Kong days, even before I was full-time crypto. Um, was there, and it was mostly market making firm that ended up trading on these exchanges, etc. And yeah, any other big Solana. I mean, I recall. I mean, I started contributing to Pyth like very much like when it started early 21. So for example, I know a handful of Solana protocol today, but I know like 4 names ago. Um, for example, I think one of the earliest team we were talking to when I started at Pyth was now Drift. Back in the day, I recall it was supposed to be called Moet or Champagne.
Oh, damn.
Um, and quite the evolution, etc. But I'd say yes. So that was mostly, let's say, the on the FTX side, knew a handful of people. Um, and yeah, one day, pretty much, thanks to Tristan, kind of the opportunity of came up, and I was very much like, okay, I have this normie job that I like, okay, doing 9 to 6, Hong Kong classic life, party with normies, etc. The classic, like pre-crypto life, until all right, this kind of project's getting up, the tech team, etc. is kind of there, but we need someone. I mean, they didn't say a janitor back then, but it was very much a janitor work at the beginning, getting the crypto stuff up and running, socials, communities, product gets launched, so you have to do BD, etc. So pretty much had 2 phone calls, ended up, I was like, all right, let's just quit and get started helping Pyth. And over time, so it's been 5 years now, early 21. Over time, I've became one of the director of the Peace Data Association. That's the actual name of the Swiss entity. But day to day, I still do most of 2 things I like the most, kind of BD, but mostly for DeFi on-chain protocols. And by BD, I mean just shilling the beauty and the quality of these price feeds and getting involved in the PIF DAO governance. So we have a whole DAO, token holders can stake, and you pretty much vote on everything. And I kind of, let's say, lead the activity from the Peace Data Association perspective in the DAO as a token holder, as a stakeholder. Um, do I have any other big kind of crypto origin story? I mean, I used to be, no, the one thing is, if you want to make money in crypto, just don't work in crypto full time. I thought that once I was gonna get into a full-time crypto role, access to seed deals, etc., don't ever do that. It's actually, I'm trading much worse than prior working full-time. Um, and yeah, I mean, I've been exposed and I've learned stuff the hard way, like whether it's the USTD peg or some other things. It has been quite the ride, and but I wouldn't trade it for the world, to be fair.
It's a fun job, but it's still a job. So
It's a
let's.
lifestyle. I think it's a lifestyle, more and
Yeah,
more.
true.
And this is where I wouldn't be able to go back to a regular company. It's I want people people care in our industry. It's not just I'm selling you something. I mean, I hope most are still very much. I mean, yes, I'm selling you something, but this thing's the best, and arguably it's the best.
Nice. So let's dive a little bit deeper into how Pyth, or the company, originated, and your tech, because PythNet basically is its own blockchain, if I'm not mistaken. And the reason, it's interesting for, the audience, hopefully, is that it's a fork of Solana. So tell me a little bit about that process. How did it go? You guys raised some money. Were people okay with, investing in a clone, basically? Yeah, how did that go?
So the whole idea of Pyth is, I mean, it's almost a legal discovery, and comes from very much inception of Pyth. The idea of Pyth, it's TradFi trading firm, most often like prop shop, whether it's high frequency trading or just people having edge and trading their edge. Um, Kind of being very tired and sick of paying millions of dollars to traditional exchanges like NYSE, SIBO, CME, paying them millions of dollars per year to buy data. Because overall, if you want to trade on this exchange, pretty much you have connection fee, data fee, and it costs a fortune. And traders are like, and you have a whole monopoly. So all the, you have, I think, 13 US accredited exchange, pretty much only them can distribute the data, and they've been raking up the prices like crazy. Like, and I think I have a data somewhere where, like, if market data was a commodity, it would have almost outperformed Bitcoin in terms of pure revenue. Like, it went from like zero to like a $10 billion annual revenue last year, and it increased like 50% every year. So it was kind of trading firms be tired of this, and the legal discovery was, let's say you're jump trading, you're Jane Street. You trade Apple stock every pretty much millisecond on all these venues, whether it's the US accredited exchange or those black pool, dark pools. Um, but based on this, like I trade Apple so much, as a trading firm, I can actually tell you what's the price of of whatever asset I'm trading. And I have the right to do it because legally I own my trade fields. As a trading firm, I'm not allowed to like replay or sell what's the midpoint, that's exchange data. But whenever I get filled, I can sell this data back. Um, and overall, no trading firms were doing this ever. So once we kind of understood that, it was like, all right, so actually, if we get enough trading firms that contribute enough of their fields data, we have access, we can create a completely new kind of synthetic price for this asset. So kind of the idea started with this. After the harder part was, all right, we now need multiple trading firms to and big ones to commit. In early days, you had, and I'm gonna forget one, but you had five. You had Jump Trading, you had Airmax, which is actually an exchange. You had GTS, which was, I'm not sure if they still are, but pretty much the biggest option market maker in the US. And Virtue, which is, I would say, at least in the top three worldwide trading volume. They're one of the biggest wholesaler. Um, and so once you have this, you start having like kind of enough data to create price feeds. Like you have enough inputs, you just have to aggregate them, remove outliers, and you kind of end up with a price feed product. And this early days, like we had US stock data 5 years ago on PIF. Thing is, no one started using it before last year. So we were too early compared to what you see today on chain or elsewhere. But overall, it was kind of proof in the pudding that, like, as an oracle, you're not just an infrastructure replaying someone else's data. You can actually rebuild it so that you create data and distribute it. So that was kind of the idea of Pyth early on. Um, and what's funny is, like we always say, crypto Twitter, it's all like, or an influencer tweets, everyone just like rush to do the same trade. It works pretty much the same in TradFi. When you announce a new partner, let's say we had announced Jane Street contributing data, the next day you receive 10 email. It's like, oh, I would like to contribute data. Just because they see the competitor doing something, usually they're pretty bright. They must know something. I must do the same.
So
So
TradFi also FOMOs in, basically. That's what you're saying.
exactly,
There's a
yeah.
lesson in there.
Uh, Not FOMOing our bags for now, but let's hope. So overall, throughout 21, 22, 23, it was very much around like, let's get more data publisher because without them, there is no PIF network. Um, In terms of the race or the PythNet, etc., what you mentioned, so the story there is pretty funny because when we first launched in 21 the product, the Oracle was natively on Solana. And by when I say the Oracle, pretty much Pyth, the network, like Pyth network, the Oracle was just a single smart contract on Solana where whitelisted addresses, aka publishers, would like send Solana transaction, and inside their Solana transaction, they would have metadata such that says BTC equals XYZ, ETH equal XYZ. And so pretty much you had publishers spamming or sending every 400 milliseconds, every new block, a new Solana transaction with their price inputs. The Pyth smart contract was every block observing all the inputs, aggregating, and the next block producing you the aggregated output. So you pretty much had the Pyth network. The Pyth Oracle was just like an aggregator smart contract on Solana that publishers would spam. Problem of this, multiple. But why in the first place we decided to do this is back then all oracles, and still today, they're black box pretty much. It's kind of, yeah, trust what the website says. I don't show you my consensus. I don't show you what exactly happened. Us having it on Solana meant, all right, we have not manipulated the price because look, it enters here. These are the inputs. This is the code on chain. This is the output. We wanted to provide this. But the problem of Solana back then was outages. It wasn't funny in 21.
It was a bit
Because
funny though.
yes, I mean, now it's funny. Back then, I recall you're like your life shatters.
Yeah.
But yeah, so pretty much when Solana went down here and there, publishers couldn't send new inputs, no new price created. Back then, we were only usable on Solana. So overall, you could argue no one cares because we had no one else using the data either off chain or on other chains. So that was okay, but we wanted to still go beyond Solana. And so at some point, the idea was like, all right, we need something that's not correlated to Solana, because at some point, like it was kind of bleak. The outlook back then, and actually, I think I saw the tweet today. It's been 24 months now that there hasn't been downtime. So maybe we exited at the bottom, but back then it was all right, half, and actually it was only half the reason. The other reason was I would need to find the actual Dune dashboard we had from these days, but Pyth publishers in 21, like pretty much they were close to 2/3 of non-vote Solana transaction. So like for all of 21 or all of 22, I would say that in between half and 2/3 of actual Solana gas fees on-chain activity was Pyth publisher.
So how
Great.
that must have been like you guys have been subsidizing the validator the validators on Solana massively.
So when Solana's at $8, you're like, okay, I mean, it cannot last forever, or you need something to offset. But when you have Solana at 250, you're like, you dollarize the amount, and you're like, oof, that's not sustainable. So it was kind of these two decisions of, all right, the outages, like we cannot sell beyond Solana in the current state, and the vibe was not great when we were saying we were on Solana, despite being a big Solana maxi myself. And second was cost. And so, yeah, the idea was the engineering base internally, like knew where the code base of Solana. What was the fastest for us? Build a new VM, fork EVM, that's pretty bad. Let's just fork Solana with minimal changes. Like, for example, PythNet, so it's a blockchain. We've marketing-wise renamed it an application-specific. It's more like application-specific chain because it has only one thing.
Yeah, it's
One
an app
Pyth.
chain.
Yeah. It works the same as before on Solana, but on its own app chain, there is a PGAS token. PGAS token, it's like mintable till we die. It has no value. It's just the pure compute unit or compute environment. And so, for example, no one can deploy a new smart contract on PythNet, for example. It's stuff we don't care, etc. And actually, what was great with this is we still had kind of the Solana performance, 400 millisecond, and we now had this one like environment of truth where we could then like send the data to any chain you could imagine. And this is where I think we started working way more with you, Triton, both on running validators for PythNet, but also on Hermes. So Hermes is more like a off-chain classic WebSocket style that just pretty much give you um, like the raw blockchain PythNet data. So yeah, so it was kind of a necessity to migrate. It wasn't on in our plan early days. It was more kind of a decision. Um, and I mean, fast forward, a good chance that like PythNet, as we know, is might disappear sometime soon.
All right. So what version? So it's a fork of Solana. Did you guys make any adjustments? Is it still Solana 1.4, 1.2, or did you guys, um, you know, go alongside Solana with the new technological improvements? We're running 3.1 right now in Solana, hoping on 4 soon. The development is increasing. How is that for the PythNet blockchain? Or did you guys we've got it stable. We can leave it at version 1 point something.
So top of mind, I won't be able to tell you which version we are, but I can tell you it's been at least a couple of years we haven't. I mean, I say we. It's not we literal sense. Validators have upgraded the code because early days the code were upgraded to the because back then when we forked it was still pretty unstable Solana. So we just had removed the big burst of NFTs coming to mess with like publishers ending transaction. So I'm pretty sure that post forking, we maybe for a year after upgrades were done, until it was very stable. And the thing, it was way too much work to just keep on like matching the Solana release, and many things we don't care at all, whether it's SQOS, whether it's priority fees, whatnot. Arguably, we don't care because it was so. I would imagine we're still in the ones in terms of versions. So what was, I don't know, mid 23? What was the last version there? We must be around this.
Yeah, 23 was around 1.6 maybe.
So good chance we're around that.
All right.
If let's say, for example, there is for what we were looking at most recently was actually more like fire dancer stuff, where and maybe to come back with Alpenglow, etc. But it's more what would we get here is, I mean, if you can 10x the block time of PythNet, I'm pretty happy. So we were looking at like how things evolve there. But yeah, overall, we don't need to have a perfect match with Solana to make stuff happen.
All right. So why is it important to have on-chain verifiable data? Why does it need to be a blockchain, basically?
So from PythNet perspective, does it have to be on a kind of publicly viewable blockchain? Actual answer is no. And actually, like Pyth Pro, like we call Pyth Lazer, which is our, let's say, newer version of price feeds and Oracle, it's technically not a blockchain. So as long as it's like distributed, reliable, and kind of censorship resistant, you don't need to have 1,000 nodes. You can, and more we see with the like hyperliquid type stuff, etc. Like you have degree to decentralization, censorship resistance you really need. So while 3 years ago I'd have said, yeah, it's mandatory, etc. I guess everyone's became a bit more pragmatic these days. But where I believe it's still paramount to have cryptographic capabilities, or at least um, like leverage cryptography, is more on the don't trust the guy that use these price feeds. As a trader, let's say you kind of trust the protocol you interact with most of the time to like just fails you, like from the UI so much is derived. So still having like cryptographic proof attached to Pyth data enables anyone that wants to build like a proper trustless, like either it's money market or derivatives protocol, can still kind of show to its user that I cannot manipulate prices. This is raw Pyth price, official stamped, etc. Thing is, we now also offer like kind of trust me bro setup where you can sign it yourself. So yeah, overall, you don't need Pyth-wise, we don't need technically to be able to constantly show publicly, let's say, how things happen. I think it's still a great feature to have. We still technically can do it. It's much harder to get a view on this. But it's also problem of blockchain is, I mean, as we understand and hear those crypto degen, it usually means you have to be able to write it free, like to, sorry, read it almost for free, and write to it, ideally not for too much. Thing is, we don't want anyone random to write to a blockchain that can impact like actual prices. And the read, it's actually very detrimental to how to like to make revenue, because more and more Pyth, like, or at least internally, I just visualize it now as a financial data provider. Whether you need this data on chain, off chain, I don't want to say I couldn't care less, but technically I don't care. I don't care much as long as you pay for it.
Yes.
Um, and so having like still kind of a blockchain, but like that you cannot read, is very powerful because we can avoid the free riding problem, which like most the V1 oracles, the push oracles failed because when you push a price to the chain, everyone can read it for free. You can play like not very nice and blacklist addresses, etc. But it's not that great.
All right. So tell me a little bit more about Pyth Pro because we're moving to a more pragmatic approach, or at least you guys are. Um, what's the difference between Pyth Pro, Pyth Lazer, PythNet, Hermes, and what's the different impact for people that use your oracles?
So, and this is where we've been the worst at my marketing and naming because I'm always like, oh, it's awful to confuse even prospective users. But overall, you can imagine today exists two Oracle. Let's call them Oracle because everyone knows this. The original one, we now call it Pyth Core. Pyth Core. So this is more the product, let's say. Pyth Core, the product. PythNet is the infra that like Pyth Core leverage. So Pyth Core just means it's price feed that are generated from PythNet. Pyth Pro, the newer thing, is leveraging not PythNet, but this new infra that we call Lazer. So Lazer would be the infra for Pro, and PythNet would be the infra for Core. Hermes, it's actually in the middle of PythNet and Piscore. It's pretty much how you consume Piscore prices. For Laser, we can have the same service, but it doesn't have a Greek name, so it's just like Laser history, whatever URL. It's not that sexy. Um, but the TLDR is big difference is the original one, fully permissionless. The endpoint, everyone can query it. You don't need no API key. Updates every 400 milliseconds, etc. It gets you the price plus the cryptographic proof. Goes at Solana speed, 400 millisecond, classic stuff. Pyth Pro or Laser, whatever you prefer, it's that more or less distributed, more off-chain kind of Oracle consensus, Oracle network that actually can go like 300x faster than Solana. So we can have prices updating every 1 millisecond instead of 400 millisecond. So as more and more like we have had interest from off-chain like fintech companies, like 400 milliseconds is actually pretty slow for the off-chain world. So seeing kind of the growing demand of financial data that goes faster than 400 milliseconds was like, all right, we need that new infrastructure that still distributed, resilient. Also, I mean, for one legal reason, for and just for like a product that crypto people would be fine using. So still have those kind of decentralization kind of perks without being like a fully open one, and give, if needed, cryptographic proof like signed data so people can use that on chain. So it's very much like Pyth Lazer is just the, as you mentioned, it's like pragmatic decision of where are we going, and where is Pyth demand. Pyth demand was like, all right, we need price feeds to go faster. How is it achieved with this? And overall, um, you cannot sustain like two different infrastructure. Like I think, and there is actually an ongoing discussion that was started a couple days ago on the Pyth DAO forum, that aims to deprecate sunset PythNet. Because now pretty much we have two competing products, where one is completely free to use, and unless you use it on chain, where fees are charged, but you could use it off chain completely free of charge, um, which is super valuable because Apple stock taking 24/5 for free. No one has this. No one ever offered this. But the thing is, you can actually sell this data for like 10 grand a month. So it's more the realization of like, if you want to make money, like 3 years of demonstrating that Pyth price feeds can work, it's more that, okay, now we kind of know or see where the customer, the demand is, what product needs to be delivered, and go towards this decision pretty much, or
So,
this design.
could we state that TradFi is more mature and willing to pay for valuable data, and you know crypto bros are basically super cheap, and you're out competing your own product that would actually bring in more revenue?
So it's kind of, you almost got it right. It's more, if crypto people, let's start with crypto people first, usually they complain about the price of Peace Pro, Peace Laser. They're like $10,000. What is this? The thing is, most crypto people, I'll say most because a ton are coming from TradFi and know about it, but most don't even remotely understand how expensive market data is. Like, I want to buy CME live price feeds. It's not 10 grand a month. It's 100 grand a month for one guy. You need your trading firm, like trading firm pay like market data, pay millions of dollars for like market data access. Our pitch to them is, and they have multiple, no, sorry, I was on the crypto people don't understand this. They're like, oh, what do you mean? I can just go on Yahoo Finance, I get data here. They don't know it's 10-minute delayed. They don't know they cannot use it. They don't have display right. They will get sued to death by US exchange. So most crypto people actually don't even understand the price tag. While actually, why TradFi people and we get more and more off-chain usage and subscriber is literally because these guys have been like, no, and have been paying like 10 different vendors, each guy 100 grand, and now comes Pyth, where they could have a single API, a single provider that spans US equities, Korean equities, crypto, FX, metal, and not for 100 grand, but for 10 grand. So it's almost, we're right in the middle of crypto people be like, this is retarded, it's too expensive. And TradFi people are like, there must be a catch. It cannot be that cheap. So I think right now we're perfectly in the middle. And overall, it's been working. Like, also, we're at a great time where now most of the crypto related adjacent companies, whether it's DeFi or even centralized exchange, everyone trades equities or oil or whatever. So now, like, we actually have, and like we have many centralized exchange like BitMEX, Coinbase International use Pyth Pro, because these guys are literally the perfect kind of customer. They already had crypto, but rather than go buy crazy expensive data at the CME, like, oh yeah, I could just get Pyth. I have this for my index for my crypto, but I also can do equities. So it's very much like kind of and the state always kind of evolve every week in, week out. But that's how, let's say, we're currently positioned. The thing is, we don't want to kind of leave everyone behind and become what we were thought and aim to destroy. A monopoly around market data is we still have free plans. For example, a crypto free plan, or our free plan is you get crypto, all the crypto price feeds that are supported completely for free. The catch is they only update every 1 second. The thing is why, I mean, otherwise the competition here is I can just query Binance API or whatnot, and I get a similar product. So it's, yeah, it's a balance to find. It's not easy. And it's, I guess also, and it's hard because sometimes you have the guy that just launched the product, he wants to do equity related stuff or FX. You're like, oh yeah, it's like 120K a year cost. I mean, it's not that, like, not everyone can pay for it, but it's sadly kind of where the market priced this stuff.
So, what would your advice be for that person watching now and saying, all right, I want to build a platform where I can trade commodities or whatever you need oracles for? And they don't have the money yet. Like, is there a free trial? Is there a, a program for bootstrapping? Is there another source for them, or should they just build around having those 1 second updates?
Great question. Some first, not everyone need low latency data. Like this is everyone like ask, oh, I need the 1 millisecond. And I mean, usually after when you mention the price, they say, actually, I'm fine with the 500 or the 1. So first, like, no, many I think overestimate their need for very low latency, highly refreshed data. Because for example, even, and because you can have even, let's say, if I were, let's say Aave or Camino, we can take these money market example, they're perfect. I mean, I don't know how much they have money in the bank account, but I'm pretty sure they could pay 100 grand ish per year for their pricing information, for their price feed. Thing is, do these type of companies protocols require sub-second financial data? And for now, they only support crypto. So, do they need to have super high frequency crypto data? No, they, because most of the time you have so little leverage that, let's say, if you need a 5% price move, arguably you'd never see a 5% price move within 1 second. So, like money market, borrow lending, or typically, or CDP type protocol, like, or typically Pyth Pro customer that could just use the free plan. So first, I think, yeah, if you're launching any type of app, think of, do you actually need, like, can, does having just like 1 second data preventing you from launching an app? If it doesn't, you likely don't need. In case you need, I mean, you mentioned trial, of course. Anyone, anyway, that wants or is about to pay that much will want to see the goods at least for some time before paying for it. So yeah, we do have, and it can go from 1 week to a month of trial. It very much depends, and we're super flexible here. And for example, when we say trial, it's almost like you can get also like 1 week of our 10K product free trial. It's not like I'm gonna constantly like manage your permissions, etc. So yeah, free trial after, and this is, let's say, Draw Labs. So the one of the labs entity that's a DAO contributor and runs this Peace Pro, or more specifically the Pyth Lazer infra. They are the one in charge of selling data off chain, the subscription, etc. So after, they're totally flexible to charge however they see fit. So for example, if you want to give 10% of your tokens, if you want to give rev share, etc., it's totally flexible there. So overall, there's a way to go around it. And also, for example, if, let's say, there's duration commitment, it's also pretty easy. And like any Web2 services, like, oh, subscribe for a year, pay up front, get 50% discount. Like anything can be done, because end of day, that's the sole goal of Duo Apps, maximizing Pyth Pro sales / revenue, because 60% of it, I mean, goes to the DAO, and 40% is retained by Duo Labs. So overall, they are, let's say, empowered to do what maximize the revenue for themselves and by extension the DAO.
All right. So let's take a step back because you say, all right, not everyone needs 1 millisecond price updates. If you put it that way, who does actually? Who does need 1 millisecond price updates and why? Like, what's the
If you have the best kind of customer, if I see an Oracle perp dex, that's usually the hallway Hail Mary. This is our guy.
So for those who do not understand what an Oracle perp dex is, what is it? How does it work? And how, like, what's the trade off there?
So you have, you can do, if you've ever opened, let's say, Binance or any centralized exchange, most of the trading you do off chain is done on central limit order books, which pretty much matches actual orders together, sales, buys, bids, asks, etc. So this is purely derived by what traders do. If no trader bids, arguably price goes to zero. If no trader sells, technically price would go to infinity. Um, so that's like kind of the real market, let's say, goods, tokens exchanging for actual value. Um, but the problem when DeFi on-chain protocol first wanted to launch derivatives protocol, and what I mentioned, order book also works for derivatives. Can be derivatives, it can be spot trading. But on EVM back in the day, you couldn't fit a central limit order book program on chain. So you kind of had to find a new way to match traders' orders at a price. And the idea was, why don't I use an oracle? Because the oracle will pretty much derive its price based on the real markets that can happen on, off chain, anywhere. But me, I don't need no order book or actually fulfill traders' position buys or sales at this oracle price. Um, Now you wonder, okay, I know at what price I'm gonna sell or buy like a position to these traders, but with what liquidity? So most Oracle perp DEX or Oracle-based perpetual protocol have similar to AMMs. They have a liquidity pool that usually anyone can deposit, and arguably your money is used to be the counterparty of traders. Why would one would want to provide liquidity? So the historical reason is that traders over time lose. It's a bit like casino. You always want to be the casino because over time, like people lose, you make money. But in addition to just losing over time, you actually charge fees to users. So overall, your yield as a liquidity provider on an Oracle-based perp DEX is just the activity. So you had this. So yeah, this type of protocol, they care a lot about finding liquidity, but they care also about having the fastest Oracle price feed, because if someone is faster than you like and knows, let's say, and I'll take big numbers just for people to grasp it. But if I know the price 1 minute or even 1 second before you, I'll just constantly front run you. If I know that in 1 second the Bitcoin price, even if it increased by only 1 bp, like even by $10 today, if I take a 500x leverage constantly and make 1 bp times 500x, 1 bp, 500x. So you had this big problem of you need the fastest source possible so that no one cannot like attack your liquidity provider. So this is why for oracles and specifically Oracle based perpetual protocol are the best because they want the fastest, they want the least latency possible, and overall we've had this product. And these guys, like, it would cost them way more than $10,000 per month to select like the second best oracle. Like this, having not being able to be front ran must like actually it should be worth like $1 million if assuming you do trading volume on your app. So um, that's kind of why like these guys, these on-chain apps have been let's say a great customer base for Pyth historically. Um, but at the opposite, for example, you could be a derivatives exchange And actually, you also don't need, not all the time, sub-second updates. Like, let's say you are Hyperliquid or you are Drift. They are order book based, or even Binance. They are order book based, so it's actual orders, buys, sells, etc., that make the price. The only thing is you need an external source of pricing, even when it's order book based. But this time it's used as an index. An index here, it's used to charge funding rate or pay funding rate to traders. So without reinventing, re-explaining the whole life of perps, but the idea is a funding rate aims to balance long and shorts. So if you have more people longs, you want to incentivize people to open shorts so it's balanced. So the idea is every hour, usually, you check what is the mark price, so the actual price on your exchange, compared to an external source that takes into account your price, but also other venues, and tells you Bitcoin, I think, is equal 80K. And depending on your own price, you'll see, okay, these guys that are shorts should pay the funding. But all this to say that Hyperliquid doesn't need technically sub-second price feed, because funding rate is only charged usually top of the hour. So you just need a price at the top of the hour. So even if Hyperliquid doesn't need sub-second price latency or refresh frequency, you likely don't. Where they might need it, and other exchange like this would, is if you start doing cross collateralization, unified margining, etc. And recall 1010, October 10, where market nuked. But the problem that happened was, especially Binance, if you recall, like USDE going to 60 cents or something like this. All this, it was pretty much like they were using internal prices, their own book prices to price stuff. And the thing is, if something goes bad, it's just like flywheel into despair. And so but even in that case, Binance, like they could have used the 1 second price feed just to value margin position every 1 second. Maybe you want to do it faster so you can like have more accurate like collateral valuation, etc. But again, I wouldn't be I'm convinced you can make it work with 1 second. I'm actually a bad sales guys. I actually convinced you not to buy out the 10K package here.
No, you made a great case for the pro plan. So let's talk about and dive into latency for a bit, because latency matters when it comes to trading. People always ask, what is the speed of your RPC? And then I'm very confused. But where does the price of Pyth originate from? Where is it published? Is it like, are you guys globally distributed? Like, is there a infrastructure in Tokyo, which is a big trading hub? Is there a infrastructure in London, which is a big trading hub? Is there one in New York, which is also one of the financial capitals? Or is it like single infrastructure that emits pricing updates globally, and then you might receive it? I don't know. I didn't check on the latest latency, but I think Tokyo is around 120 milliseconds away from where we live, you and I. So how does that work?
Great question. And second thing that it's also, I mean, people don't get that much is latency. First, it's different than refresh frequency, very different. And it's actually way more important. So till now, I didn't even mention latency. But and this is a Southern X more important than internet than refresh frequency, because you could refresh every millisecond something that's like 1 hour delayed.
Yeah, exactly.
What's the point? Or instead, you'll get a price update only every second, but it will be, and I'll just say a number here, like 1 millisecond of end-to-end latency. So the moment you receive it, it was actually just created 1 millisecond ago. This is amazing. So and I'll just answer from, I'll start with Pyth Lazer. So this where So I mentioned you can get price refresh every 1 millisecond, but what's the end-to-end latency here? We've benchmarked it versus, so on crypto versus all the big exchanges where price discovery happens. So it's either Coinbase when the US are up, Binance, here and there, Hyperliquid. And overall, Pyth Lazer end-to-end latency for crypto is in between, is averaging at 50 millisecond to 100 millisecond. So 50 to 100 millisecond end-to-end latency. Where and how the infrastructure looks like. For now, all the infra of Laser is within Japan, around Tokyo, multiple data center, runs a whole bare metals, etc., just to maximize kind of availability and also performance. Why only Tokyo so far? I mean, most of our existing customer base, when it was launched like a year plus ago, was crypto people. So like, okay, we have to be next to Binance, all these guys, etc. But where you're right is like now we have a southern US equities price feed. And if you're in the US, where it's either New York, Chicago, where most of the price discovery happens, does it just increase end-to-end latency? Yes. And so for US equities, for example, we're more in between the 100 to 200 millisecond end-to-end latency. Same kind of design than crypto, but just, the data, the inputs are coming from way further out. When I say it like this, you're like, oh, damn, that's not that great. So how, or like what should be done or could be done about it? Like, I mean, learning a bit from Double Zero. That's the whole thing of crypto. Always look what others do, because it's like good source of knowledge, and like they are the trailblazer for you. But having Pyth Lazer, Pyth Pro available from like multiple jurisdictions, multiple regions, so that, because after you also have like some compliance perspective that us crypto people don't even remotely think of, but some like regulated company might. So right now everything's in Tokyo, but the goal is to have in New York or Chicago, but like we'll see. I mean, like benchmark, like it's all benchmark based decision, just because like half of the Pyth usage now is coming from like US stock interest. So this is the next big thing that has to be tackled. It's like end-to-end latency for stocks. And last, but I mean, I almost say least, is Europe. And it will be more for the FX world, metals, etc., that do trade a lot there. So today, Laser only Tokyo. Over time, it will be multi-region, multi-data center, and you can connect wherever you want,
So
just to optimize.
will it be like region specific? What prices are generated or found basically, or will it become like a global state machine like Solana is, where across all regions all information is shared interchangeably and communication goes both ways?
I would still TBD because it has to be kind of built and shipped. But the former. So it would be more like have kind of region specific. And so for example, equity data, your private, like all your, if your publisher you'd run or you'd want to run this directly from the US, optimize that travel speed. It's overall less complicated. It's a bit more ops, let's say, um, but it's way less complicated than rebuilding. I mean, what Solana wants and is kind of becoming of this global state machine. It's like, I don't think it's worth all the extra kind of engineering work while you can just optimize ops wise. All right, US data is created here. And anyway, if you consume it from Japan, you might have to eat the latency or the added travel time anyway. So it will be a bit more likely like pragmatic release rather than go tackle what Tori seek to build.
Well, I know from firsthand from traders that they deploy locally wherever. So they're running trading scripts identical in multi-region based on the lowest latency available to them. All right, so we're nearing an hour already. I love talking to you. I'm gonna ask you my last question. If you're watching, also take this opportunity to write your question in the chat if you have one. Not many have been asked yet. So you mentioned 00, and I was gonna make a bridge to 00 because I have them on soon. Having a private networking for delivering price updates with low latency and high throughput, is Pyth Pro being offered and consumed via the 00 network? Let's say you guys publish a price update. Will that travel to, for instance, New York or Amsterdam or Frankfurt, which are big trading hubs, over the 00 network? Or does that go over the public internet? And is that going to change soon?
Jesus. Let's try to not front run some TBA stuff that might not even be announced from our end. I want you to ask also after the question when you get Austin on. But yeah, definitely. We've seen companies that runs on stuff on 00 network, including trading, including some of the hottest Solana topic around AMM, prop AMMs, etc. So yeah, definitely looking at like not only kind of leveraging the infrastructure that also 00 like builds and offers, but it's also more and more of potential customers are going to run stuff via 00. So yeah, and engineers are engineering as far as I know. I'll just come up in couple weeks or whatever the timeline is, just reap the fruit and claim, oh yeah, this is great on the next podcast.
Well, it makes sense that your price updates do not have to compete with, you know, your audio visual interests regarding people doing stuff on OnlyFans or competing with cat pick memes like I do. So yeah, it would make sense, but funny that I found some alpha there.
Ask Austin, because I'd much rather him disclosing than me doing a mishaps.
Well, you didn't announce anything, so yeah, I'm not sure what kind of NDAs you guys are under.
I mean, I forget everything. That's it's one trick. I'll give one trick to people. Force yourself to forget stuff, so you can always claim ignorance at some point.
Exactly. Well, I didn't hear anything, and if you want to watch this back, you can find our YouTube channel, or it will be live on on my X page. Thank you so.
Wait, is this recorded? Is this public?
So this is live, actually. All right. Thanks so much for being on. Yeah, we're up to an hour. Is there any last words? Are you guys hiring? Do you want to promote Pyth Pro? How can people find you? Who should find you? Take it away.
Thank you, sir. Hiring, I'm pretty sure. Check out either when I'm trying to remember. Check either the Pyth Data Association website, pyth.data.association, or check the Draw Labs XYZ website. There would be two companies, Pyth related hiring for sure. The big thing now I want to share, I mentioned it quickly, is more the go have a look at the Pyth DAO forum. It's like as a DeFi kind of born bred and like DeFi guy, I very much love that the network itself is not just like a labs run show. It's not like whatever. So it's like pretty much the future of like organizational structure. It's not yet Futoki. It's not yet those ownership coins that MetaDAO has been shipping left and right.
So Wellian governance.
But and this is great too. This is amazing. I love what Realms is doing, Squad's doing. Like everyone that is remotely involved in like in DAOs on Solana is actually amazing. The only one thing we miss, and it's not shouldn't have become a rant about DAO infrastructure for Solana, is a snapshot tool. There is no snapshot tool, but yeah, but go check the forum because everything happens there. Everything has to be approved by a token vote or like by the constitution. So it like imagine Pyth as a elected republic. That's how it was kind of shipped day one. You have elected councils, etc. But go on the forum because there is activity right now, like good conversation around the future of many big things within Pyth. OIS, so what we call Oracle Integrity Staking. So pretty much you stake token, but if price feeds are wrong, you get slashed. This slashed amount can go back to the impacted user. So there's a whole topic on what should happen to OIS right now. There is another big one around the future of PythNet, because we quickly mentioned, but the original product kind of competes with the new one. So what should be done about it? And is there other? There's the Pyth hackathon. So I almost forgot this, but if you're a dev, this is done by the community council. So by the Pyth community council. I think there is close to 300K Pyth token to win, and you can get like Pyth Pro trial keys, of course. It's heavily focused towards AI, and I think it runs for another 4 or 5 weeks. All the details of this are actually other forum, the Pyth Dev forum this time. But if you started vibe coding like me or whatever, or just want to see how it looks, there is the Pyth hackathon. So actually, that's the thing to do. That's the CTA.
Awesome. Thanks so much for being on. For everyone watching, thank you for your attention. Next week, let's see if I already have a guest for next week.
If you have one, you are better organized than Pepito when he was running the Beyond the Price weekly streams, because it was more like 2 days before. Who's coming?
Well, I actually have a guest, and it's not going to be on Wednesday. It's going to be on Tuesday, and it's going to be Stephen Hess from Metaplex. So big guest coming on next week as well. Thank you so much for your time. I always love talking to you, even though you have a thick French accent. And I hope to see you in person soon. Thanks everyone for watching.